Vietnam's real estate market is facing unprecedented challenges. The situation is extremely dire. Low sales numbers have dropped over 92%. Bankruptcy in 2023, 14,400 units quitting their jobs due to the legal and capital raise issues. They go away from buying, the less expensive it will be. They're not transactions or people buying. Cannot sell at a lower price. It's not the best time. Markets are in a slump. So the reason for this collapse, I want to give you my own personal opinion. Are you ready for this? Vietnam's real estate market is tanking, but the rentals are soaring. Just when you think you've seen it all, Vietnam's real estate market throws you another curveball. Once the thriving engine of economic growth in Vietnam has hit a wall and is more terrible than you can imagine. But not for everybody. So it is 2024 and we were expecting, or at least hoping, that the real estate market would rebound. But right now it's a very standstill. There are no transactions of buying and selling the properties, even in spite of the government giving discounted rates, incentives, and other encouragement for people to buy. Sales have plummeted tremendously in Vietnam. What you're about to get is an unfiltered, stark reality of what's happening in the real estate market, both for the buyers, the investors, and also the renters as well. So if you're interested in real estate, definitely stick around for this content and video that we're about to give you. As sales plummet, but yet the real estate rentals are still very high, this is creating a real estate paradox in Vietnam. So the question is, why are investors running for the hills, but yet renters are coming into Vietnam in droves? We are going to get into the hard facts and the figures to tell you the reason why. So hello, my name is Ken Duong, international and business immigration lawyer with over 15 years of experience globally and 10 years experience here in Vietnam to help many foreign investors to buy real estate in Vietnam, invest, develop, and other many projects as well. And that is something that we're going to talk about today about the Vietnam real estate market. It's 2024 and yet Vietnam's real estate market is facing unprecedented challenges. Even in spite of developers dropping prices and the government giving different incentives and also encouragement for folks to buy, transactions in real estate are very few and far between. Thus, the situation is extremely dire, but we want to paint the picture for you by giving you specific numbers on what is happening in Vietnam. According to certain statistics by the Yan Khoi real estate company, DKRA Vietnam, most of the properties are sold in the lower end sector between $76,000 and $96,000 per unit. And most of those sales actually happened in the first quarter of 2023 with extreme declines in villas and townhouses for the Q3 of 2022. Also, JLL, another real estate company, corroborated this information with extremely low sales numbers for the entire 2023. And also the projects that are new in 2023 will cut down tremendously. Only 180 projects were launched in 2023 in Ho Chi Minh City. So the reason for this collapse was due to the high property prices, the strict loan requirements, also the investors or consumers wanting to maintain higher liquidity and not holding on to properties, and also the consumer expectation of a slow market movement and a slow pace as well. Also, on the other side, there's a limited supply of projects due to the developers' hesitancy to begin a project, also consumers not wanting to buy, and finally, the legal and construction requirement processes have taken a lot longer. For example, especially in the transactions for townhouses and villas have dropped over 92%, which is the lowest in the last 5 years in Ho Chi Minh City, and Bình Dương accounting for 45% of that decline. So as a result, 1,300 real estate companies filed for bankruptcy in 2023 based on the Vietnam Statistics Office. Amongst the firms that left the market, the companies that were disbanded or suspended increased by 21% compared to 2022. Also, companies that are filed procedures to disband and waiting for the result have also increased 29% compared to 2022. On average, 14,400 units have left the market every single month. With the real estate market being hit the hardest, with over 1,300 real estate companies closing in 2023, which is an increase of 8% from 2022. This led to 70% of brokers quitting their jobs based on the Vietnam Associated Realtors statistics. This impacted not only the real estate market, but the economy and the employment as a whole. Statistics from the Ministry of Construction showed that some of the construction companies, their revenues had dropped by 16% compared to 2022, and the profits have dropped 66% for a total profit of the market of roughly about $57 million. The latest data from the Ministry of Construction showed that the successful transactions were less than half of what they were in 2022, and this was due to the legal and capital raise issues. In fact, the government issued a stimulus package of VND 120 trillion VND, but up to this point, only 83 billion VND have been dispersed, which accounts for only 0.07% of the amount allocated. Contrasting the selling market, we look at the rental market, and it paints a totally different picture. Right now, in 2023, the prices of rental units have increased from 10 to 30% due to some of the higher interest rates on the mortgage and also the higher prices for the properties themselves. Thus, most people are having to rent, including locals and foreigners as well. So in the context of the real estate market, the buyers and investors are taking a wait and see approach. Thus, they go away from buying and going towards the rental sectors. For example, a one-bedroom apartment in 2022 went for $15 million, 2023 went for $16.5 million, and an estimate for 2024 is about $18 million. As you can see, the rental markets continue to rise due to the demand in renters coming into Vietnam. So if you compare the rental prices of a one-bedroom, roughly about 50 square meters, the further away from the CBD, the less expensive it will be. For example, if you rent a one-bedroom in Vinhomes Central Park, what is in Thu Duc, or formerly District 9, would be about $8 million per month. And as you get closer to the city center, a place called Binh Thanh, Pearl Plaza, you're looking at a one-bedroom roughly about $16.5 million. And then you get to a closer, higher-end area in District 2 or Thao Dinh, such as the Nassim, which is roughly about $22 million per month. And then you get really, really close to District 1, which is the Vinhomes Ba Song, or what we call the Golden River, which you're looking at about $25 million per month. As you can see, there's a diversified rental rates, quality, and location. Thus, there are many options available in Ho Chi Minh City for you to rent. So you probably watch a lot of videos about the real estate market, but I want to give you my own personal opinion, the reason why we made this video. So if you look at the prices of the real estate itself, it continues to stay high even though there are not transactions or people buying. And the main reason is previously there were very high valuations on the projected growth of Ho Chi Minh City. Thus, the housing valuations were high. They gave higher loans, and many times the loans were actually 100% of the market value. Therefore, the buyer cannot sell at a lower price, or what we would consider a lower price than the market. And thus it creates unreasonably high price, which causes the increase in rentals. Because now with the economy slowly rebounding in different sectors, there are many foreigners coming in, renting short-term stays or getting visas and working in Vietnam, or they're coming back to their old positions and working for companies as well. So thus the increase in the rental prices is very normal due to the increase in the demand of units required, but yet the prices are still very high for the real estate itself. And this problem is not just in Vietnam, it actually happens in Bangkok, in Hong Kong, and many other developed countries as well. So if you're looking to rent into Vietnam right now, it's not the best time, but in reality it's still cheaper than many other parts of the world. Despite the challenges in the residential and commercial real estate market in Vietnam, the industrial rentals and units are still a beacon of light right now. So there are many multinational corporations looking to move their factories into Vietnam and renting the various different industrial spaces and industrial zones. In fact, the occupancy rates of the north were about 83%, here in the south about 91%, and the national average roughly about 80%, which is very good as these foreign nationals companies continue to move into Vietnam, especially in the manufacturing sectors of pharmaceuticals, technology, and also F&B as well. This is a really great sign that the industry will continue. Moreover, the banks also are lending for exports out of Vietnam, which increases the manufacturing and industrial zones and real estate properties. For individuals or corporate foreign buyers, you can get a 99-year lease on the land that the factory or the industrial park is in. Or if you are of Vietnamese descent, it would be wise for you to get a Vietnamese passport and citizenship to be able to own the land outright just as a local citizen would. Other options would be long-term investments through the DT program. Getting a work permit, TRC, will give you a longer stay as well. So as a law firm with over 15 years of experience helping foreigners invest into Vietnam, our team of experts will be happy to help you. As I wrap up this update, although the real estate, commercial and residential markets are in a slump, you have to look at the opportunities in industrial, logistics, or supply chain in order to invest in real estate in Vietnam. In order to stay informed of the most updated information, make sure that you like our Facebook page, subscribe to our YouTube channel, comment below about your thoughts about the Vietnam real estate market, and of course, click on the bell for notifications. So thank you very much for watching this video, and on behalf of Duong Global, my name is Ken Duong. Thank you very much, and I'll see you in the next episode.